Good evening, everyone, and welcome to the 100x Live channel. My name is Shashank Randev, and I'm the founder VC at 100x.vc. And today, we're going to have a very insightful discussion with my partner, who's the founder and partner at 100x.vc, around the India Sentiment Outlook Survey, which we recently launched. It's the third edition of the 100x.vc India Sentiment Outlook Survey. And since 2019, we've been very curious to learn about the current sentiments each year. And this survey, in its third edition form, attempts to fill that vacuum of information on a range of topics, from the mindset and outlook of the startup founder to the perspective of a venture investor. And we conducted this survey in the second quarter of 2022. And as India is pushing towards the knowledge-based and digital economy, with the government attempting to deploy digital infrastructure with NPCPI and NPCI and Startup India and other PLI policy initiatives, we've seen tremendous rise in the value of private investments, and the number of VC funds, both from within India and globally, look at startup as an asset class. And the 100x VC India Sentiment Outlook Survey report provides a snapshot of the current sentiment among founders, VCs, angel investors, and other types of investors. And this report survey was conducted between founders and types of investors, including CVC, which is corporate venture capital, giving a sense of what is the current state. And I would now like to invite Sanjay Mehta, founder and partner at 100x.vc, to share his views on the report. I'll be asking him a few set of questions which were covered in the survey, and we'll be hearing his responses and the 100x views on the same. So thank you, Sanjay, and welcome.
Hey, thanks, Shashank. Thank you for having me live at this and to share my views on what's the outlook, what's the sentiment around with founders and investors alike. Let's
Thanks.
roll.
Thanks, Sanjay. So it's been a long weekend. The sentiments have been high on the whole India level, but also you've been dealing with a lot of companies, a lot of founders. Class 808 is in swing with 100x having increased their check size also. But what has been the sentiment around founders wanting to raise money? And the first question to you, Sanjay, is what are the founder sentiments on business growth environment in 2022?
I mean, personally, I'm not seeing any slowdown while people talk about pessimistic view. Look at the the market. I mean, is the buying slowing down? Are people not going to movies? Are we not buying online? I mean, business is as usual, right? It's thriving, it's growing. People are spending money. So I'm not seeing a business slowdown. If there is no business slowdown, then where is the impact on the business, right? So look at look at the automobile sector, right, which is quite a good indicator of bullishness. There are waiting queues of 4 months, 5 months to get automobiles, right? Unless people have capital to spend, they're not going to be waiting in line, kind of stuff. So I think while people are talking about various sentiments, I'm not, on the ground it's a very different reality. On the funding environment, it may be challenging for a lot of the big boys, but at early stage, still it is an opportunity for VCs to invest in potentially growing startups. In fact, our research itself, with founders, have suggested that almost 49% of them believe that the fundraising environment will be better, and people are bullish about it, kind of stuff. And we believe that, I mean, personally, this is my take, saying that if founders are able to build a business, a better business in this kind of times, they cannot, they cannot only survive, but they will thrive, actually. So I'm very bullish in terms of founders who are trying to build business in the current sentiments.
No, great. So business outlook seems good. Founders are looking forward to raising funds. But the next question becomes, what are the key sources for these founders to raise funds from?
I think that there is a good amount of opportunities to founders from various sources. Direct investments have improved across. So I've seen across a lot of angel investors are investing directly in founders. We have seen VC funds which are continuously, pouring in money. There is enough amount of dry powder available with Indian VCs who have raised money to deploy. Angel networks are mushrooming left, right, and center. We have got family and friends pool which is there. The new pool which we are emerging, and we are looking forward to is corporate venture capital. So I think in that sense, as an asset class, I think startups are being looked upon as an positive investments kind of stuff. Top three preferences from the survey side, if you look into, is one is we saw founders saying that direct investment by angel investors is something what they look out for, and then comes the VC funds, and then comes the angel network. So that's how it is, kind of. But more or less, if you look into it, the differences are not as stark kind of stuff, right? So more or less, all three, direct investing, VC funds, angel networks, come at the same level.
But for the first time, the indicator is that angel investors are getting more confident in investing directly into companies as opposed to, let's say, last 5 years.
Oh, absolutely. There is a huge change in the mindset. I mean, we can definitely see across angel investors being confident about investing directly, engaging with founders directly, working hard with the portfolio companies where they've invested, and helping them scale and grow across. So I think it's a good sign, actually, from an ecosystem perspective. If you see more and more angels trying to build their own syndicates, trying to lead deals. So I think it has worked out quite well. And, I've been big proponent of creating more lead investors. And you very well know I would have trained over now maybe over 5,000 angels, with various classes which I take across to help them learn how to invest and lead deals. So I think I'm very happy in that sense, seeing this whole impact about angel investors directly investing in startup deals. Yes, Shashank.
And so, Sanjay, with that, I'd like to touch upon 100x.vc introduced the concept of ISAFE nodes. And we've been investing over the last 3 years through ISAFE nodes. But one of the questions is, are founders aware of ISAFE nodes, which was pioneered by 100x.vc?
See, what we did was, and when I was doing angel investing, having invested over last 10 years in 150 odd companies in my personal portfolio, I'd seen across deal closure times were very, very challenging, right? And that's where we came out with iSafe nodes to close the deals very quickly. So, I'm not sure if all the founders are, but definitely we have made a good inroad with the founders, and a lot of the other, what do you say, angel networks, incubators, accelerators are using iSafe nodes for their deal closures, kind of stuff. So it's very gratifying because we made it open source, right? We made for public to download iSafe from 100x, use it. It's a template driven agreement to invest in startups. So it becomes very easy to fund a startups, close a deal, typically which would take across anywhere around 3 to 4 weeks minimum to just get the first document draft, kind of, and then the deal closure and money in the bank another 3 months. This is like in couple of days you are done, kind of over the counter kind of feeling, and quick closure. Founders, it's a very founder friendly. You don't need to give board seats. The rights are not required. Very, very simple way of investing, right? This is the real angel investing, where you as an angel come into it, invest into founder basis on their trust, kind of stuff, and this simple agreement of future equity gives you the right to equity in future rounds whenever the bigger or larger round happens across. So I think it's a win-win from both founders and investor side. And I assume the way it has been adopted and the popularity of ISAFE has been growing across within the Indian startup ecosystem. I think it will replace all the seed stage investments in India very soon, kind of stuff. The first check investing will be done through ISAFE more or less in India. Another give a couple of years here and there, and I think we would see ISAFE as the default investment method for any investor or any startup to raise capital.
No, and I agree, because the next question, my next question was, which was covered in the survey as well, was, do founders view ISAFE as a friendly investing instrument? And it's a positive 52%. So that is a clear indicative. My next question, Sanjay, which we covered in the survey, and we got a response for that, which is very interesting, but would love to get your views, is how long do founders expect 100x.vc's first check, which is now 1.25 crores, roughly USD 160K, as early stage funding to last for? How long do they expect this? We got responses in the report, but I would like to get your views on the same.
See, Shashank, 1.25 crore is a good first check for any startup founder to begin across their journey, right? Where we invest our early stage companies with some offshoot revenues, MVP getting going live kind of stuff. Now, all these companies, they need to think across. I mean, you can use the capital for 6 months, 12 months also, or else you can stretch it up till 24 months or maybe 36 months, depending upon how fast or slow you are looking to scale. The only thing which I would recommend all the startups is saying that think across your next round of funding and then spend the 1.25 crore. See, idea here is when you consume capital, right? You have to generate enough performance metrics for your next round of funding. Now, is this metrics going to get generated within 6 months, 12 months, 18 months? Basis on that, you deploy capital. If you are in a trial and error mode, if your product market fit has not been achieved, then you would like to consume capital frugally, right? You would like to consume it in a way that it will last you long. And once the product market fit is achieved, then you really accelerate on growth capital. Now, 1.25 crore is a seed capital, what we have invested. This is all on the hope side of it. We are hoping that the business will grow, business will scale, business will be able to generate enough revenues for them to raise the next round of funding. If that is achieved, I mean, see, from an ISAFE node perspective or an agreement perspective, there is no lock-in. I mean, the guys can spend it in 6 months, 3 months, their own way. But idea is they need to be sensible enough, right? Founders who have been able to raise more capital are people who have been able to show capital efficiency, right?
Yes.
So if
Yes.
they believe they have got an understanding of how to use capital efficiently, they can go ahead and build a plan. What we do at 100x, I mean, just as a broader audience understanding, we work closely with founders. We understand founders are first time founders. They need help on the business plan, how to consume capital, what are the ways to build a business plan, what are the things where you hire, you fire, everything which is required to consume capital in a right way. So we spend a lot of time mentoring these startups on the financial modeling, help them build the business, arrive at the right strategy plan, right, to build a solid go-to-market plan, and then it is rest for the founders to execute. So I think I wouldn't like to put a saying that okay this should be consumed only in 12 months or 18 months or 24 months. It's about the founders, how fast they want to grow, and how they are aligned with the business growth so that they can raise the next round of capital.
Got it. Thanks. Thanks for that, Sanjay. And before I move on to the set of questions from the which gives a perspective from the investor side, last question on the founder side, we ended up asking them a question around what do they think, founders think around the current focus on metaverse and Web3. And the response we received was, they felt it was good opportunity. 55% of them balanced. 28% thought they didn't have much of a view, and 17% felt that it's a hype, but 55% thought it's a good opportunity. I'd like to get your views on the same.
No, I think, see, Shashank, there's a rapid innovation happening in the space. There's an accelerated, focus and interest from big boys, big corporates into the space. The technology is maturing across, and this is where the an inflection point which is coming where metaverse, Web3, everything is going to merge across and create a new opportunity to create a digital economy built on blockchain, and that's how I think the next decade will be framed. This is like the nascent stage. How we saw in early 2000 the Web 2 story panned out, right? The internet, the first Amazon, Google's, Facebooks of the world got created. We'll see more opportunities in the Web3 space happening across in next decade or so. So I think as an 100x, we are very bullish on the Web3 space, metaverse space, and looking across for deals into the same space.
Great, Sanjay. So, the founders' response was collected from, 475 founders. And, there's interesting set of questions. There are multiple questions which we asked. And, for the viewers, please go ahead and download our reports from the website. But I'll now move on to the set of questions which were asked to the investors. And we had a very diverse set of investors participate across the globe, across multiple geographies, and across each category and type of investors. So, one of the questions which we asked was how many startups do investors in 2022 plan on investing or plan to invest in the next 12 months? And there were interesting responses where, at least, 52% said they intend to invest in less than 5 companies, and 11% said that they'll be investing in more than 15 companies. And, 5 to 15 companies was the indicator by 37%. And so Sanjay, my question to you is, what are your views? Because 100x as a fund, has raised multiple follow-on funding for our portfolio companies, and we've seen a diverse set of VCs, family offices, and angel investors invest in companies. So your views on how investors are reacting to this?
I think it's a very bullish statement. If you see half of the investors are going to fund 5+ companies, or at least 5 companies, this is a good indicator, right? I mean, एक angel 5 company में invest करेगा, then it's a good opportunity. Look at the number of angels which we have in India, right? And with this sample size, even if we are looking at, let's say, 2,000 angel investors, right, and 5 companies, that's a good sizable amount of money which is going into various startups. So I think it's a good bull run which is happening across. People are very positive on sentiments about investing in early stage as an asset class, and I think it's a good build out for next couple of years for various early stage investors. And this is a good time for startups to go out and pitch to angel investors, raise their first checks from angels. So overall, I think it's a good statement, and this survey is going to help a lot of the founders understand the investor mindset, where investors are coming from. So it's a good indicator, Shashank.
No, and I agree on that, because we asked another question in the survey: how many more unicorns do investors expect in 2025? And at least 45% said 100 to 200 unicorns, while more than 200 was the response by 23%, and only 32 odd percent said less than 100 unicorns. So overall, the response was that investors are expecting more unicorns to come out for. But what is your view? Because Sanjay, you've been investing as an angel first before you started 100x. You've had personal portfolio of a bunch of unicorns, and now having done 80 plus investments in 100x.vc as a fund. What are your views about the whole unicorn story emerging in 2025?
No, I believe, Shashank. See, I was fortunate to have four unicorns in my portfolio, and unicorn as a term was coined to mark a rare breed of private invested startup companies, right? And if I have to quote across Mohandas Pai, he said that India will see across 250 unicorns by 2025, right? And globally, if you look into it today in 2022, there are around 1,000 odd members in Unicorn Club, right? So which means 1,000 startups are already unicorn in globally. And by far, fintech has been a common category for most unicorns. And let me make a bold statement here. I believe there will be in 2025, out of the 250 unicorns, 100 will be fintech unicorns. Right? It's a bold statement I'm making in public. We will see 100 unicorns in fintech itself. Right? Fintech is a big category, and I believe huge opportunities still exist to invest in fintech. So, I mean, India is unstoppable. In fact, if somebody wants to read, they can go through my blog about how India is unstoppable and why I believe fintech as a category is big time there to scale up and blow up big time.
No, I agree. And I think, echoing this thought, and obviously the data being validated in the report that there's strong interest by investors, angel investors, investing directly into companies, and the founder's ability to raise capital. So we ended up asking a question in the survey, Sanjay, which was, at seed stage, where do these investors see more startup deals coming from? And we'd obviously seen responses, from syndicates, incubators, accelerators, investment bankers. But many of them ended up responding. 48% said angel networks. What are your views on the same?
I mean, I would say India would have roughly around 25,000 odd angel investors.
Agree.
And definitely to get a big deal flow, angel networks, syndicates, accelerator incubators play a big pivotal role to get their first deal access, right? Uh, while a lot of them are now very, very prolific using angel investing as a, I remember in 2013, 14, when I used to do this professionally as a full-time angel investor, very few, maybe a handful, 8-10 थे हम लोग who were doing that, full-time angel investing. Now I would say there would be at least 200 plus people who would be doing full-time angel investing itself, right? So opportunity is just growing phenomenally well, and I think angel networks have to be, made so much. Has made the access to deals so much easy, made it popular. While it comes at a fee, transaction fee, but at least deal to mil raha hai, काम तो हो रहा है उनका. So they will have the first access, and as the things will mature, they will start investing directly outside of angel networks also. So I think the first port of call will always be angel networks.
No, and just building on that point, Sanjay, we also covered, in the founder survey, we were already shown that investors want to directly invest into companies, right? And one of the questions we asked is, what is investors' preferred mode of investing in startup? And the response we got was 57% of them were looking to directly invest into companies, and 32% were looking to invest through angel networks slash syndicates, deal to deal, and others wanted 8% wanted to participate as an LP or limited partner in a fund. But I'd like to get your views on the same. What is
No, see,
this signaling to?
Shashank, idea here is, if you want to be very selective in terms of investment, write small checks to begin your journey, angel investing through angel networks makes sense. Once you have got some level of confidence, you start doing syndicates, right? Which is deal to deal engagement. And when you write a bigger check and you don't have as much time to manage or look at deals, you say, okay, let me go to a fund manager, become an LP. It's easier to give up my capital to a fund manager and let them invest on my behalf. So I think, see, each one has its pros and cons, and the way to, I would say, across. Let's say you go through LP, pros are that you have to write a larger check of 1 crore, which is a SEBI mandate as an LP. Now, as an LP, if you go into that model, the pros are there where the fund manager, who is an expert, is going to invest on your behalf. It's a blind pool. Basically, आपको कंपनी पता नहीं है ना, आप इन्वेस्ट कर रहे हैं. It's a blind pool. If you go through LP, I mean that syndicate route, you choose deal to deal kind of stuff, right? And you end up paying your carry and fee on a deal to deal basis, not on an aggregate how an LP fund would work across.
Correct.
If you invest through angel networks, basically you pay a small fee, no carry, kind of stuff model. So each model has its own way of investing. And as a startup, investors keep maturing, they will go up the ladder and create across all the investment opportunities for themselves at different levels.
I agree. And obviously, we are seeing a lot of these investors who want to directly invest into companies are also utilizing instruments which are easier to get inside a company. Obviously, ISAFE has, at least 100x has pioneered in terms of directly investing through ISAFE and reducing the timeline. And hence, it was but obvious to ask these investors a question: how do investors view ISAFE notes in comparison to shareholders agreement? And we got very interesting set of responses from that side as well, where they echoed the same thing: simple to execute with no legal cost. 56% were wanting to use ISAFE notes, and balance 15 to 3% were said it complex to execute and legal cost is high, which I would love to speak with this 3% as well. But I like to get your view, Sanjay, because 3 years, ISAFE investments, 80 plus investments through 100x.vc, and we've dealt with multiple angels as well as angel networks and VCs. Your view on how investors are viewing ISAFE notes?
See, it is the founder's prerogative how they would like to push their round, right? If a founder would like to raise money on iSafe, investors would be open to close it across, kind of. So it is always how founders or entrepreneurs would like to close their initial first round. In fact, I've seen across a couple of smart founders being able to close multiple iSafe notes. Which, what I mean is, they will do an iSafe note at an X valuation, and as more interest will grow across, they will do another iSafe note, at a different valuation, and another iSafe note at a. So they will have at least 2 or 3 rounds of fundraise before they actually get into a shareholder agreement, a Series A round, right? So they will do a couple of rounds of fundraise in different iSafe notes. So it is very easy to close rounds using iSafe notes. So this question being asked in survey and the response gives an indication saying that investors don't mind putting money in startups using iSafe notes. So that's the validation, and that's where I think entrepreneurs should take this indicator as a positive note for them to raise money through iSafe notes whenever they are raising their capital or their rounds with investors, saying that let's use iSafe notes to close the round. Again, for founders and investors, it's open source. You can download it from 100x website and use it across, no legal cost, just templatized version, fill in the blanks and close the round.
And no survey report and 100x India sentiment report would be complete without asking this question to investors. What are their top sectors of priority for 2022 and 23, or that financial year? And Sanjay, we got responses where investors were giving priority. 23% priority was given, or showed interest in SaaS as a sector as the top 5 sectors of priority for them. SaaS being at 23%, fintech being 22%, deep tech being 21%, B2B businesses at 18%, and clean tech at 18%. Other sectors like agri-tech, Web3, and edutech, did see interest, but were on a lower priority. But I'd like to get your views on the same.
I'm actually very bullish on the EV market. I believe EV is right to invest. I'm very bullish on the Web3 metaverse, as I mentioned earlier. So a lot of opportunities over there. This sectors will be growing very rapidly. So there are a couple of reasons. So let me just so for example, EV. There is good amount of economic incentives which are being poured across, right? There is an economic impetus which is being given across by government. So I think that sector is just going to rise. On the Web3 side of it, we are seeing tremendous amount of education, developer interest. There's see we every what do you say? Every sector, whenever it begins across, there is skepticism. अरे ये नहीं चलेगा the Web3 and metaverse are in that space where people doubt it. But with this kind of developer interest which I'm seeing across, I think it's here to stay and scale rapidly. So I would say these two sectors, while they are not a part of the survey, they are growing rapidly, and investors should look at that very smartly.
Understood. So, Sanjay, we're running out of time, but my last question from the survey which we asked for to the investor. There are a bunch of questions to the audience, guys. You can feel free to log onto our website and download the report for looking at the other set of questions. But my last question for today's session is, Sanjay, we ended up asking a question directly to investors because we saw these indicators that interest by investors to directly invest into startups, the rise of angel investors in the ecosystem, and their ability to invest directly through multiple instruments, one of them being ISAFE instrument. So we asked them a question: beyond providing capital, how many total hours of mentorship do investors allocate to the entrepreneurs in their portfolio in a month? And we got very interesting set of responses. 43% said they allocate 6 to 15 hours. Less than 5 hours was a response by 28% of the audience, while 16 to 25 hours was a response by 17%, and only 12% were willing to do 26 hours and upwards. I'd like to get your views.
I think mentoring is the key focus. Why entrepreneurs raise money from angels. Angels are somebody who are expert in their domain area, who would be expert in. So let's say, for example, I would be happy to share my expertise of building a software company, having built 2 software businesses, scaled it to a level, exited, kind of stuff. So happy to share those notes. So as an angel, I used to be, a good lead investor for B2B startups. I used to have good network of CIO, CTOs to help them open up my network and, give them customer access. So I think these are some of the stuff. So for example, I mean, you can go on and on. These are like fertile stem cells. The way I say this, tell about these founders are, these are like stem cells. So how much you work on them, how much you spend time with them, and give. So we have a saying in 100x, mentoring unlimited, right? We don't measure in hours. We just go all out and work with the startup founders. So idea here is, this is all about passion, right? This is all about helping the companies build, and that's what I mentioned in this Atmanirbhar Bharat, the 75th Independence Day. 100x is all about building companies, building India, right? And we will continue doing so.
Okay, thank you, Sanjay, for that. And one final response from your side, thoughts to the viewers, mostly early stage founders, in terms of how they should view 2022. 30 seconds response.
I think it's a great time to build companies, and we'll be happy to help you guys scale, build, and grow your business, apply to 100x.vc slash class 08, and we'll be closing soon class 08. So time is running out. Apply now.
Thanks, Sanjay, and thank you, everyone. So, to conclude, the 100x third edition of the India Sentiment Outlook Survey, gave us the results that despite some headwinds, early stage startup ecosystem in India continues to thrive and will continue to attract more investments from domestic and overseas investors. And 100x continues to evaluate more companies. As Sanjay said, we are excited to evaluate more companies and fund them. So keep sending in your decks and apply to Class 08. Thank you, Sanjay. Thank you, everybody else.
Thank you. Bye, Shashank.